Coinbase CEO Brian Armstrong just said the quiet part out loud for everyone to hear. And this is something we need to lock in on because over the last couple weeks, there has been so much drama around the crypto market structure bill. And I feel as if a lot of that noise has been drowning out the major focus of this bill and what it really means for crypto at this moment. I also think that it really threw a lot of people off the path on exactly why we want crypto regulations in a positive way, not a anti-crypto way, which is exactly what this bill at this moment is. It's essentially an anti-crypto bill which caters to the banks, and that's a big issue. Now, we'll obviously go in depth on a few things here, but I want to start off with a few things. Number one, Justin, CFTC Chair Michael Selig says Congress is very close to passing crypto market structure legislation. Now, we have been hearing about this for weeks. In fact, we heard that this was very close weeks before the delay. So I wouldn't necessarily say that we are very close to it. I think that a lot of these accounts like Watcher Guru, for example, are engagement farming accounts. But, I would say going off of this post along with this one that we did get a big update from the Senate AG committee, it does feel as if we are getting closer to this because we have here that update. Senate AG committee releases latest crypto market structure bill because, again, they were set to release the latest crypto market structure bill text. Now, I was trying to find this. I wasn't able to find the actual text. Maybe I wasn't, just looking in the right area for this, but I could not find it. So either this is also, engagement farming, or maybe I'm just completely missing it, but I did not see any changes when I looked at the bill or anything like that, because you could see it online if it did get updated. I wasn't able to see that, but hopefully we do get the new text possibly this week. That would be, very big, especially considering the fact that we do know that a lot of these CEOs, including even Brian Armstrong, have been working closely with the banks on a new draft. So we'll have to see what happens. Obviously, I will read it and I'll keep you guys posted on any major changes that happened in the bill. But we are hopeful that we can get this done by the end of Q1. Now, we also heard from Hester Peirce. Big shout to Bank XRP for this. We have key update from SEC Commissioner Hester Peirce on Bloomberg. Senate is finalizing details on Bitcoin market structure bill. Regulatory clarity incoming, huge for digital assets, commodities classification, and accelerating RWA tokenization. Check it out.
On the market structure bill, and just get your view as an SEC Commissioner on if you think it should move forward in this current iteration.
Well, again, that's above my pay grade. I think that there are a lot of really smart people in the Senate working on moving things forward. We're excited to see it move forward. It is important to get all the pieces right. There are a lot of very difficult issues here that people have been trying to figure out how to deal with, and I think it's good for people to take their time and figure that out. But excited to see the bill move forward.
On the market structure bill and
now, obviously, she kind of does a cop out there and doesn't really answer the question. However, I will say that we are getting closer to this getting finalized in a positive way for the crypto industry. There was a lot of issues on this, recent bill. I mean, at the current state of our current bill, we cannot pass this. We cannot have this pass, which I'm hopeful that this new draft is very positive for the space. And it also encourages competition, which is exactly what the current bill kills, is competition between the banks and crypto. And that just cannot be. Now, we did hear from Patrick J. Witt, who is the executive director of the President's Council of Advisors for Digital Assets. Now, in this, we have crypto exchanges are not safe. It does not matter the size of the exchange either. Bybit, the fourth largest crypto exchange by trading volume, recorded one of the largest crypto hacks in history back in February, where $1.4 billion was stolen. And if we're looking at some of the top 10 crypto hacks in history, most of these are resulting from major exchanges. So where do we store our crypto outside of cold storage devices? Well, iTrust Capital offers premium custody accounts, which is one of the safest places to store your crypto because these are fully closed loop systems, which are designed to isolate and protect assets. And the best part about this is that if you are holding digital assets on their platform, they can only be withdrawn in USD linked to a US bank account, which means no external wallet connections can happen, which reduces the exposure to phishing or unauthorized transfers. So if you guys do want to tap into one of the safest places to lock up your crypto, you could sign up utilizing my link down in the description below right now, where you deposit $1,000 and you get a free $100 funding bonus today. No bill is better than a bad bill. So he's quoting those that said that, hey, we don't want a bill because this is a bad bill. We have what a privilege it is to be able to say those words thanks to President Trump's victory and the pro-crypto administration he has assembled. But let's not kid ourselves. There will be a crypto market structure bill. It's a question of when, not if. Assuming a multi-trillion-dollar industry will continue to operate indefinitely without a comprehensive regulatory framework is pure fantasy. So, do we take advantage of the opportunity to pass a bill now with a pro-crypto president, control of Congress, excellent regulators at the SEC and the CFTC to write the rules, and a healthy industry? Or do we fumble the ball and allow Dems to write punitive legislation in the wake of a future financial crisis a la Dodd-Frank? Now, I'm just going to say it right now. This space operated for years without regulations. This space was fine without regulations. I don't think that we need to usher in a bill and streamline it simply because of political issues. Yes, do I think that under the Dems was crypto, targeted? 100%. Do we risk having that happen again? 100%. But I don't think that we need to bend the knee to the big banks. This bill can happen fast. We could pass this bill right now. But the only way that we could pass it right now is if we fix the glaring issues in the bill and we stop working towards bankers' profits. Why are we trying to protect the bankers' profits in this bill? That should just not simply be the case. Now we have, you might not love every part of the Clarity Act, but I can guarantee you'll hate a future Dem version even more. Let's keep working to improve the product, recognizing that compromises will need to be made in order to get 60 votes in the Senate, but let's not let perfect be the enemy of the good. Listen, we need a bill that will protect the industry and those that use the tech in this space, aka the end user. We need to get this right. That way we can actually pass it. If we're not going to protect the retail users and we're only going to protect the profits of banks, yeah, I don't want this bill to pass. I could care less. But if we are going to protect the users and not care about what the banks do and ensure that competition is, protected, then yeah, pass the bill all day long. I hate to see a lot of these CEOs like Brad Garlinghouse saying like, oh, hey, this right here is the key to not have a perfect bill. Listen, I don't want the bill to be perfect. I just want the bill to not protect the profits of banks. I want competition to be the key driver of regulations. We should not have to bend a knee to the banks. We have no piece of legislation has ever been perfect by everyone's standards. What we need is a clear framework allowing innovation to flourish, exactly what market structure will deliver. I'll keep saying it, even if others disagree. Clarity over chaos. I agree. But what we are getting here is clarity with protections of bankers' profits and absolutely killing competition over chaos, which is a problem. I agree. We do need clarity, but not like this. Now, I want to align everyone with what Brian Armstrong just said. This was on Bloomberg in Davos. Armstrong didn't back down. He doubled down. This is on Bloomberg at Davos. Brian Armstrong explained why Coinbase pulled support for the Senate market structure bill. His issue was simple. The draft tilted too far towards banks. Bank lobbying groups were trying to limit stablecoin rewards, block tokenized equities, and lock in advantages for TradFi. Armstrong called that un-American and said he wasn't going to sign off on a bill that bans competition. The key tension? Banks pay 14 BPS on savings. Stablecoins can pay 3 to 4%. Banks are worried about deposit flight, not consumer protection. Armstrong also made an important distinction people gloss over. Coinbase isn't doing fractional reserve lending. Stablecoins are 100% reserved, different risk and different rules. He said the White House still wants a deal. Senators want a deal. Even bank CEOs privately see the opportunity. This wasn't Coinbase blowing things up. It's about refusing to accept a bad draft and forcing another round. That's how negotiations actually work. And I completely agree with this. Check it out.
This moment in DC about getting market structure legislation passed. And the bill's made good progress. It got a strong bipartisan vote in the House. It's now being deliberated in the Senate. And there was a little bit of a blow up last week. I don't know if
a little bit of a blow up. All right, let's go there.
Yeah.
It seemed like a big blow up, but you pulled your support for the bill.
For that current draft.
Yes.
Yes.
Why?
Well, there was too many giveaways to TradFi, if I can say that. Our view is that there should be a level playing field for this is allowed, this is not allowed, and then all the U.S. companies compete. And banks didn't like that. They were, in my view, like the commercial sides of these banks are very smart, and the CEOs get it, and they're talking to us about integrating crypto. The bank lobbying groups and bank associations are out there trying to ban their competition. And I have zero tolerance for that. I think it's un-American. It harms consumers, and the banks need competition. They need to innovate. We also saw this from some of the securities broker lobbying groups because tokenized equities are a big thing happening in crypto. So there was 3 or 4 kind of red line issues we saw in the draft text. And as I was in DC that day meeting with members of the Senate, I asked them, okay, is there a path to fix this after it comes out of committee? And they basically told me behind closed doors, if this comes out of committee with a bipartisan vote, we can't really help you on the full Senate floor. And so I felt like I had to stand up and say something defending our customers' rights. And I was careful not to opine on what the Senate should do in terms of a markup or not. And I was careful not to say anything. We don't represent the whole crypto industry. But from a Coinbase point of view, I was not comfortable with the draft text as written. And I'm glad that everyone came back for another round of negotiation.
Well, other people have been saying stuff. So since we're going here now, a journalist from Crypto in America said a White House source told her this is President Trump's bill, not Brian Armstrong's bill at the end of the day, and that the White House is going to pull out if you don't come back to the table. You push back on this. What's really happening?
Oh, yeah, I mean, this is not our bill. I give all the credit really to the Senate, and certainly President Trump has said that this is a core part of his crypto agenda. So my impression is that the White House is fully leaned in here and wants to get something done, as do we, as do the bank CEOs that I met with today. So I'm not seeing any real barriers here. There's some people who are a little grumpy. I think they got caught off guard that we didn't support the draft as is, but it's kind of like that metaphor of 3 blind people looking at an elephant and everyone's trying to figure out. There's probably somebody in the administration who had that point of view, but that's not the people we're speaking with. I don't think have taken that approach. They actually very much want to get this done.
Now, there's this ongoing fight about whether platforms can reward customers for holding stablecoins, which Coinbase does. The banks have argued this is a deposit flight risk. Is that the real sticking point? And what do you think about the flight risk concern?
Yeah, so that's certainly one of the core parts of the debate. I think that some of the bank CEOs I've spoken with have kind of said, hey, we have this really high regulatory burden with being a bank, and what you're doing kind of looks like a bank, and so we think it's super unfair. You should have to have a bank license too. And what I tell them is, well, we're not doing something very important that you do. We do not do fractional reserve lending, which means, for those who don't know, at a bank you deposit your funds. They're not keeping your money there. They're actually lending it out and earning interest on that, and then they pay you a very small percentage of that. Like the average savings account makes like 14 basis points or something. And that's called net interest margin, and that's the whole bank business model. And so that's why they have such high regulatory burden, because there can be a run on the bank. Like your money is not all there. In a crypto world, there's a 100% reserve. So all your money is there. It eliminates this entire category of risk around a bank run. No such thing is possible if there's 100% of the money there. And so we don't need a bank license. We're regulated by the SEC, the CFTC. We have a national trust charter. Like there's different entities, and stablecoin issuers can operate under these models as well. And so we've kind of said, we don't need a bank license. That's what currently already exists in the law. The Genius Act even enshrined that further. And so there has to be some other solution here. How do we flip the banks from thinking of this as a threat to an opportunity where we can all go win?
Let's talk about the.
So yeah, listen, at the end of the day, when we think about what he is saying here, yeah, this is, the banks against this industry because they see a big threat here. I mean, this is not something new. Like, the banks have fought this industry for well over now 8 years plus. I mean, I'm just going back to 2018 when they started to really, heat up the anti-crypto push. But throughout the years, I mean, we have gone through major ups and downs in this space where, we've seen and we've witnessed major attacks from the bankers utilizing regulators, utilizing politicians. I mean, it's nothing new. And Perianne Boring even also said the same exact thing. Banks earn 5.7% risk-free at the Fed. They pay you 0.1 to 0.5% on savings. That spread is policy enabled. The yield goes to banks, not you. Since 2008, banks have been paid trillions in interest on reserves, funds that otherwise could have reduced the federal deficit. Now, those same banks are trying to kill the market structure bill so crypto companies can't pay you interest on stablecoins. This isn't about safety. It's about preserving a monopoly on yield. Voters will remember the politicians who chose bank profits over your right to earn. And yes, I don't care about Brad Garlinghouse. I don't care about the fact that he's the CEO at Ripple. What I care about is the fact that he is supporting a bill that is drafted in a way to protect bankers' profits. But it's not just Brad. It's Kraken. It's major crypto companies like Circle. It's players like Patrick Witt, that are telling you, hey, this bill's fine. No bill's, like we can't just go throughout this and say like no bill is better than a bad bill. We need to get this passed, so like as fast as possible because we risk giving control to Dems. Guys, at the end of the day, what we are really risking here is competition being killed so that the banks could continue their monopoly in the digital age of payments. This is just not the case. We have a very rare opportunity in front of us to make sure that we kill this monopoly and we make sure that competition thrives. And remember, it's not even just about the stablecoin yield. There's a lot of other things within this bill that they want to essentially kill. Tokenized equities, for an example, is a big thing that they want to ban. This bill needs to be worked on. It is being worked on. I'm very hopeful that by the end of Q1, we can get it passed through as well. We already know that Brian Armstrong is working closely with banks on this as well. So, I'm very hopeful to see what happens here. But I'm very happy that we did get a second draft on this because, again, this first draft was just simply not good for the industry. So with that being said, I hope that you guys enjoyed this video.